Hello everyone, welcome to the Tax by Podcast series. My name is still Pieter and I'm very happy to welcome two of my fellow colleagues here, two experts in the field of CBAM, carbon taxation and trade. Because this is the very first episode of a new sub-series in the podcast where we will talk about carbon border adjustment mechanism. That's a mouthful, but we're going to abbreviate it as CBAM. We're going to talk about the broader landscape of European carbon taxation. So, as your host for this podcast, I'm very happy to welcome in the coming weeks a number of colleagues, a number of experts in the field to unpack what CBAM means for businesses, importers, manufacturers, basically for the entire global trading system. CBAM is one of the most ambitious and, frankly, most disruptive pieces of climate regulations in the European Union. And it has an impact on iron, steel, aluminium, cement, fertilizers, and so on. It's not just an environmental policy, it's a trade policy, fiscal policy, and there is an important compliance angle to it. And it's all wrapped into one big package. So with the period kicking in on January 1st, 26, the stakes have never been higher. So first of all, I want to introduce you to my two colleagues, Helena and Aurélien Denis. Helena is part of our trade expert group. So she's an expert in customs, trade, and is the CBAM driver. We also have a carbon expert with us. That's Aurélien. Welcome to the podcast. Let's kick it off, right? And maybe start with the bigger picture, because for many of the listeners, Helena and Aurélien, it will be a bit new, the topic we're going to discuss. So can you explain how CBAM fits into the broader European carbon taxation framework and why it matters today more than ever?
Yeah, that's a fair ask, Pieter. Thank you for the introduction. So actually, I will need to further understand CBAM, I need to start speaking about the EU ETS, because, CBAM doesn't exist alone. It's the natural extension of the EU emission trading system, the EU ETS, which has been the EU carbon pricing mechanism for now more than 20 years. So the EU ETS, it puts a price on the carbon for European industries through the purchase of EU allowances. And the price of those EU allowances has risen quite significantly over the years. So on one hand, you have EU ETS for EU production, and on the other hand, you have CBAM for non-EU production. And so the problem is that European industry has historically been protected from international competition through free allowances under EU ETS, meaning that the EU installations were not obliged to pay their full carbon cost. They got free emissions per se. And so as the EU tightens its climate ambition under the Fit for 55 package and aims for a 55% reduction in emissions by 2030, and those free allowances, those free emissions, are being phased out. And so CBAM is what replaces that protection. It ensures that imports of non-EU goods face an equivalent carbon cost to what European producers pay. And this is the kind of mechanism that prevents the infamous carbon leakage.
Okay, thanks, Aurélien. So, CBAM is the extension of the ETS system. So is CBAM essentially then leveling the playing field for European and non-European production, Helena?
Yeah, exactly. And what we see from a trade perspective, it's almost a paradigm shift. So for the first time, the carbon content of a product that is crossing the EU border, it carries a tangible financial cost. So it transforms, in a way, customs declarations into climate declarations. So importers now, they have to think about emissions data the same way that they think about the classification code of a product and the country of origin rules of a product, indeed.
Okay. Thanks, Helena. Maybe it's time to go a little bit into an update for the audience. Maybe it would be interesting to know what's new in the ETS, the emission trading system, that the listeners of the podcast should be aware about.
Yeah, of course. And we will start with ETS updates because, as we previously said, ETS and CBAM, this is the two sides of the same coin. And so the most important update on the ETS side is the phase out of those free allowances for the CBAM sectors. It means that starting, at least right now in 2026, free allowances for sectors like cement, iron, steel, aluminium, fertilizers, hydrogen, those CBAM sectors basically will begin to decrease. And they will be fully eliminated, fully phased out by 2034. So no more free allocation, no more free emissions for those sectors. And so it is worth noting that this phase out is being pushed even further because the Commission has just published last week or 2 weeks ago, a draft proposal revising those EU ETS benchmark, the benchmark value used to allocate free allowances. And those benchmarks are also being tightened for the 2026-2030 period. Meaning lower benchmark, a lower benchmark means lower free allocation, which means higher carbon tax. And so this is critical because the CBAM obligation for importers is directly linked against those free allowances. And so, as I mentioned, as free allowances disappear, the CBAM cost ramps up correspondingly. And so we have also seen different updates on the EU ETS. The price, of course, which is quite, which reached a significant level, I would say, generally between 65 euro and 80 euro per ton of CO2. And so it is important to remember that this is the kind of price that CBAM importers will see when they will need to comply with CBAM.
Okay, and thanks, Julia. And in terms of the scope, what kind of developments are ongoing there?
So again, the scope of ETS itself is expanding, but it is not quite new, I would say. We now have the ETS2 coming our way for buildings and road transport by 2028. So it impacts basically all the installations that are not under the current EU ETS. There is also maritime transport that is already into the ETS scheme since 2 years now, and same for planes. And there are also additional discussions to include more EU installations under EU ETS. And so the regulatory perimeter is widening, definitely, and that has a cascade effect on EU supply chain. Basically, more emissions are being taxed, so we can expect a higher carbon cost at the end.
Okay, thanks. So turning to you, back Helena, so and CBAM specifically, the definitive phase is now live for CBAM. So importers are facing the real financial obligations today, not just reporting. What are the key updates that you would share with the audience for people to follow up on?
Yeah, indeed. So 1st of January, we had the definitive period kicked in, or the financial period, as it is also called. So we are moving now from a reporting only regime to full compliance with financial impact. So importers are no longer just declaring embedded emissions. They are actively preparing for the actual financial obligation being the first surrender deadline of the 30th of September 2027 for the CBAM report. And the CBAM certificates might be far away, but much is still to be done by importers and third country verifiers to ensure that we have all of those data flows in place and that the CBAM goods are also rightfully classified against customs legislation, so that you are sure that the products that you are importing, that they are indeed under the scope of CBAM. Another task is the calculation of the goods embedded emissions. For that, you will need to reach out to your suppliers. You will also need to prepare for the emissions verification, because indeed you will need to appoint a verifier to assure that the emissions that your installations or your suppliers have shared, they are indeed correct and according to the CBAM calculations. And then you have the task of preparing for the purchase of CBAM certificates in itself. So you will also have to find someone in your company who will do accounting of the CBAM certificates when you need to buy, when you need to surrender them, and when you need to sell them potentially back to the CBAM authorities. So maybe worth recalling how we got here. So the transitional period, it ran from October 23 to the end of 25. We had quarterly reporting in that period. So you had to submit that through the CBAM registry. This was basically a learning phase, both for the importers and the authorities. And just before the definitive phase began, the European Commission has introduced the so-called CBAM Omnibus simplification package. As the word says itself, there were some simplifications introduced because of that learning period. In those 2 years, the authorities learned that the CBAM mechanism might needed some tweaks to be valid and a useful measure. And the most impactful element of that simplification package was the de minimis threshold of 50 tons per importer per year. So meaning that if you are importing less than 50 ton of CBAM product a year, you will be exempt. And that resulted in the smallest occasional importers not having to prepare for the full CBAM scope, removing roughly 90% of the importers, while still being able to capture 99% of the emissions. So the CBAM mechanism that we have currently in place is really targeting the companies where it is relevant. And that is a regime that we're now currently under.
Okay, that's indeed a significant simplification, cutting out 90% of importers, but still keeping most of the emissions. Are there any other simplifications to take into account?
Yeah, so the Commission, they has also been fine-tuning the methodology for verifying embedded emissions. And this matters because the verification will be the gateway to whether you can use actual emissions data from your suppliers. So without verified data, you will fall back on default values, which are essentially a CBAM surcharge. And they are set high enough to push importers towards the real actual data collection. More recently, the Commission has published its proposal on how to handle the deduction of the carbon prices already paid in third countries, a way to avoid double taxation of carbon. So meaning that when you have already paid a carbon tax in the country of origin, you will have the possibility to deduct that from the CBAM costs. This proposal is currently still open for consultation, and companies now have a four-week window to share their feedback on it. So if you are listening to the podcast around 19th of May, you still have some time to prepare and give your feedback.
Yes, and let me add also something more on the carbon accounting side, Helena. Definitely 2026 is really a critical year for both importers and third country operators. So the Commission has further refined the methodology for calculating and verifying embedded emissions, which is a bit different than the one that was used during the transitional phase. So importers and suppliers, they need to align with that. And so this puts really the spotlight on supplier engagement because lower CBAM costs only come through verified actual emissions data most of the time. And it means that importers really need to support their suppliers in building the compliance around it. So building a monitoring plan, capturing the right data at the installation level, and preparing the operator's emission report in line with the CBAM methodology.
Okay. And I'm just curious, what about the scope of the products that are covered? Is there anything changing there, Helena?
Yeah, indeed. So for now, 26, 27, the scope remains the 6 original sectors that we were talking about. But the Commission has published also last December a significant proposal to expand the scope to further downstream goods, mostly of iron and steel and aluminium. And those would be in the scope of CBAM starting 2028. Now, what's critical to understand is that this expansion, it will impact a whole new population of importers, many of whom have never dealt with CBAM before. So they will need to start assessing their position, I would say already today, if you can, because they will not have the luxury of a transitional phase to gradually build up their data, their processes, and the supplier engagements. No, they will really, from one day to the other, be subject to CBAM and making sure that they can follow. So there's also an active review underway to potentially extend CBAM to other sectors as well, like the organic chemicals and polymers, which we believe will also have a very significant impact. So to sum up, the scope of products covered the coming 2 years will not change, but we see tremendous changes in the years after.
Okay. Well, thanks for that. So yeah, CBAM, the definite period is now live. The impact is there, the financial consequences. So if you were in the audience of this podcast, what would you recommend businesses or the audience to be doing right now? Maybe Aurélien, that's a question for you, I think.
Yeah, maybe I would say 4 priorities. First, map your imports. You need to know if you are falling under CBAM or not. And this, the triggers of that is your CN codes. If you're importing more, as I mentioned by Helena, if you're importing more than 50 tons of CBAM goods, then you are impacted by CBAM. Once you are impacted by CBAM, you really need to work on the governance around it. And I believe this is something that we will see in the other episode, but we saw with our clients is that CBAM is not only a one department topic. You need to rely on supply chain, sustainability, trade, customs, legal. So you have all this kind of ecosystem that needs to collaborate together. So definitely CBAM governance is a key priority for the newcomer, I would say. And then once we have done that, engage your suppliers, because as we already said, relying on actual emissions from your suppliers will be, as from today, the best course of action if you want to reduce your CBAM liability. It takes time to get emissions data from suppliers, to get compliant verified emissions from suppliers. And so you really need to start working on that. Then after that, you need also to understand the cost of CBAM. You need to model your financial exposure and start making provision for next year, because even though the actual payment of the carbon costs under CBAM for 2026 imports will only start as from February 2027, you need already today visibility on what CBAM will cost you. You need already some visibility on what CBAM will cost you for 2026, 2027, and beyond, if you want to really include CBAM within your strategy. And so, helpfully, on that part, the Commission has just published the CBAM certificate price for the first quarter of 2026. So this is a price that will impact imports of the first quarter of 2026, and this price is 75 euro 0.36 cents to be precise per ton of CO2. That's the price of the CBAM certificate for the first quarter. And so it gives the importers, I would say, a more concrete figure to anchor their forecasts.
Yeah, and from a customs and compliance angle, I think first things first, apply urgently for the authorized CBAM declarant status if you haven't already, because without it, you simply cannot import more than 50 tons of CBAM goods annually into the EU, and already as from April 2026. So pay attention, you need that status. It's an easy way, and it's easy to get it, but it's a task that you need to check off your list. But that's only the starting point. Importers really need to go back to the basics of customs compliance. So you have to make sure that you have your customs flows under control. You need to have full visibility on what is being imported, where and by which legal entity, because the legal entity that is importing the CBAM product is also the legal entity that will need to report and that will need to pay the CBAM certificates. Pay close attention also to the classification of the goods. We said it before, but the CN code, the combined nomenclature code, that's the determining factor of whether you are in scope of CBAM or not. Making errors in the classification code has always been costly, because you are overpaying or underpaying duties, but now you have that CBAM angle there as well, driving up the cost of incompliance or non-compliance. And the same applies to the third pillar of customs compliance, which is the country of origin. It's not just a customs formality anymore that you need to analyze and report the correct country of origin. No, it will now also directly drive your emissions data and the potential deduction of carbon prices that were already paid in third countries. So as a key message, really make sure that your customs master data is under control. Legal entities, classification codes, countries of origin, and also do a bit of a tip of the iceberg of what's coming next. We hear it all in the media. We have the EU customs reform. When you see what is being planned there will also be a very, very high focus on customs master data being needing to be in control. So yeah, with having a focus on this, you will catch multiple birds, I would say. Finally, also think about optimization opportunities. So there are legitimate exemptions and customs regimes that you could apply for. Think of something very simple like a bonded warehouse or inward processing, which can significantly reduce the CBAM footprint of a company as well. So if you, and that's what we see in the markets, quite common, a bonded warehouse, the business case was not there yet because the duties paid was not that high. Well, now calculate the CBAM cost into your business case, and it is very likely that for quite a lot of companies, the bonded warehouse will become an an easy optimization opportunity.
Well, thanks both for that. So some concrete advice, some concrete input for the audience. That's appreciated. We're moving towards the end of this episode, but Helena, when you approached me to do a number of podcasts, let's say in the same space of CBAM and so on, I found it a very good idea because we get a lot of questions. We see there's a lot of interest. So before we wrap up this episode, maybe it would be good if we explain a bit to the audience what they can expect from the following episodes in this sub-series. So Helena, enlighten us.
Yeah. Thanks, Pieter. So in episode 2, we will dive deep in the CBAM impact on businesses, financial, operational, but also strategic. What do we see companies do in the market? Which decisions are they taking? And here I also want to flag something really important. There is a very common misconception circulating in the market, and that is that CBAM will only cost 2.5% in the first year, because only 2.5% of emissions are payable in 2026. Now, that number is quite misleading. So it is a technical calculation, but in fact, it refers to the CBAM factor that mirrors the phase out of free allowances. But it's just one variable in a much bigger equation. So when you actually run the numbers, when you actually do your calculations for your upcoming CBAM costs, you will need to factor in the full embedded emissions. You will need to look at the ETS price. You will need to take into account the absence of certain deductions, and also the rapid escalation of the CBAM factor. So going from around 2.5% in 26 to 100% by 2034. So the true cost can be substantially higher even in year 1.
Yes, indeed, yeah, if I can add on that, and that's before you factor in the operational costs of being compliant, the data collection, the verification of the emissions, potential IT systems to collect those data, the customs processes, the working capital tied up in CBAM certificates. So companies that anchor their planning only on that 2.5 figure, they are going to be in a very, very unpleasant surprise as from 2027, when they will need to pay the actual cost of CBAM.
All right. You have clearly already the skills of the podcast, because this is a perfect cliffhanger for the next episode, I would say. So for the audience, I would really invite you to subscribe to our podcast, follow the next episodes. We're gonna go into the real cost of CBAM and what you can do about it. So I think interesting insights. And that's actually it for episode 1. So thank you very much, Aurélien and Helena, for explaining everything so clearly. And to our listeners, thanks for tuning in as well. And we hope to see you again in the next episode. Thank you.